JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 10th of November. I wanted to say December, guys. 10th of December 2020. So yep, welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, some of the charts that we looked at this morning just to see how everything is getting along. But before we do that, as always, guys, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation. It should not be considered as such and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So jumping into the charts now, quick update here on the German index, the DAX. It's drifting heavily to the downside, yep. But the most important is that the index remains above this 13,213 territory. I talked about this one, guys. I've mentioned, so just a quick update. What I was saying, that if the price continues to, or should say the daily candle continues to remain above this area, then yes, we could see a nice reversal here back to the upside. So, or in other words, also if this upside line also provides good support near the, which is taken from the low, the 13th of November, yep, we still could consider the downside. However, consider the upside. However, if we get a break of this area and we get a drop below the current lowest point of this week, which is around the 13,163 territory right here, a drop below this area would also place the price below the 21-day EMA, shown here as the yellow line, and maybe more sellers could see this as a good opportunity to step in. Now, of course, what we're keeping an eye on here is on the weekly candle, because at the moment it's turning negative, however still remains above this upside line. So again, let's see if this is going to be enough for the bears this week. If not, like I said, yep, keep your eyes on that upside line here. If that gets broken and we see the price dropping below the current lowest point of this week, near the 13,163, then yep, that's where it could become a little bit more interesting for more sellers. Now jumping into Dow Jones Industrial Average. So this idea still is working out nicely. I'm not going to spend too much time on this one because I've covered this already. Basically, I'm keeping an eye on this rising wedge pattern. And yesterday we saw a nice reversal back down here. However, looking at the price and the price on the cash index and where it's currently sitting at, it's currently near the or just slightly below the 29,950 territory. So basically, it's below that psychological 30,000 territory, and it's sitting around here somewhere near the yesterday's lows. However, still within this pattern, within this rising wedge pattern. If the boundaries remain intact, well, we could still see this index reversing and pushing back to the upside, so keep that in mind, guys. However, if the lower bound of the rising wedge breaks and we see the daily candle staying below it, yes, of course, this increases the chances for a possible further move lower. However, just to be a little bit more on the safe side, a drop below the 29,668 territory right here, marked by the high of the 23rd of November, could do the trick for more sellers, because at the same time, the price would be placed below the 21-day EMA here. So keep your eyes on that one. Nasdaq 100. So yesterday broke this upside support line taken from the low of the 2nd of November. Of course, all this is not really looking good here for this index, and we could see this one drifting further south. Currently the price is sitting at around 12,255 territory, so basically it's sitting near this area, near the or just slightly below the high of the highest point of November, if I'm not mistaken. Yep, that's no, that's not the highest point. That's the high of the 9th of November. So it's currently sitting slightly below it, but still above the 21-day EMA. So that's kind of giving a bit of hope here for more buyers. However, if we start seeing this one drifting below the highest point of October, which is around the 12,205 zone, that's where it could become a little bit more ugly for for a few bulls, and further declines could be possible here, guys. So yeah, for now, basically the only thing we can do is keep our eyes on some of these key support levels, because if they provide a good hold up, we might see a nice rebound and a push higher. But if they start surrendering, well, I mean, we could go for a bit of a larger correction to the downside, because the reason why we're using the word correction, because, well, we are still trading above a few upside lines, so any move, this whole move lower right now could be seen as a temporary correction, so keep that in mind. DXY, so DXY is let's say struggling with this downside line. Not going to spend too much time on DXY because it keeps saying the same thing. Basically, we need to see a break of this downside line and a push above the 91.75 territory in order to kind of aim for some higher levels. But at the moment, it's yeah, it's a little bit of a tricky one here. So let's see how this is going to play out. But if this starts moving back down here and drops below this 90.59 territory right here, I spoke about this one previously, then yep, lower levels could be met. But at the moment, I'm taking a bit of a neutral stand on DXY. Gold is trying to recover. However, it's still, as you can see, this 1849 territory is acting as a wonderful area of resistance. At the moment, I would say it's quite an important level, this 1849, and you can see why. If the commodity struggles to overcome and get back above this 1849 territory, now yes, we could see a bit of a, let's say, a move back down again. However, as I mentioned to you guys this morning as well, that I would prefer to maybe wait for a drop below this 1800 level, below this 200-day EMA, and then aim for some lower areas. I do understand we could be missing out here on some territory, but to be honest, it's all this area right here is very tricky, very I would recommend to be very careful around it, because again, this could travel lower, it could find some support maybe near this 1818 level. I spoke about this previously, and then it could rebound and push back to the upside. So that's why the slightly safer bet on the for the downside could be on a break of this 200-day EMA around this 1800 level. Ripple is drifting to the downside today a little bit. However, it still kind of seems to be forming this potential descending triangle. Now, with if we can say it this way, that with two basically bottoms, but because we have a perfect, beautiful bottom right here, we could class this as a symmetrical triangle, but at the same time, so this one right here, but at the same time we have a slightly lower area right here as well, which also is acting as a fantastic area of support. So in other words, guys, if we get a drop below the 0.5407 territory, yes, that kind of opens the door towards lower areas, because this also places the price below the rate below the 21-day EMA, so more sellers could start joining in here. But we do have this obstacle here, the 0.5050 territory. But however, let's say if you let's assume if we are let's say entering a trade somewhere here, and if it's starting to go in our direction, certainly the stop loss has to be placed in front of this this entry, the 0.54 territory, basically, just in case this suddenly reverses sharply to the upside and goes against you, so that you would at least have a break-even position here. But if it starts dropping below the 0.5050 territory, well, that works out even better. So yeah, for now, guys, keeping an eye on this. It looks quite interesting, but yeah, let's see how this is going to play out. In case this doesn't travel lower here, and in case this decides to travel towards this downside line, well, all eyes are on this, on a break, on a potential break then, because if that gets broken, yes, then what else I need is a push above the 0.6288 level right here. In order to kind of strengthen the upside scenario. But at the moment, the upside scenario seems to be slightly off the table. So let's see how this is going to play out. AUD JPY, jumping into a few pairs. I've mentioned AUD JPY this week, and I was talking about this area right here, the 77.10. You can see we had a nice pop above it. Then this area acted as a wonderful area, a wonderful support zone. And my next target was this 78.46 territory. So initially I was talking about this level, the 77.74 mark. But what I was saying, that if that gets broken again, then my next target is the 78.46, which is the highest point of August. Excuse me. I'll take that as a win. I'll take that as a good result, because again we just fell shy of a few points from reaching that area, but nevertheless that's a great result. So for now, what I'm going to do here is I'm going to stand away here, and I'm going to observe the price action, because I want to see if this is going to surrender or not. This highest point of August, near the 78.46. If that's going to surrender, yep, great news for more buyers. Higher levels could be met. But at the moment, given that we already had a decent up move here, and the fact that the equity markets are sliding a little bit, so basically we're kind of entering the risk-off environment. So, which means that yen buying might resume. Which could cause AUD JPY to drift back down. So that's why keep this in mind. Again, for now you can see that AUD JPY is pushing higher, so but the equity markets are pushing lower, which is a little bit strange, I would say. However, if the selling pressure more selling pressure kicks into equities, then well, we could see AUD JPY maybe reversing back down a little bit. USD CHF, so we are at a very interesting spot here. First of all, we are struggling with this hurdle, with this little area right here. Near the 0.8875 territory. We had a drop initially, but you can see that the bulls are really fighting hard. Now, again, I've previously talked about this idea where we could see a bit of a correction here to the upside, and then maybe a move lower. For now, the fact that it's currently getting a hold up here near this area, near this 88.75 zone, that kind of puts that idea into kind of or let's say makes it a little bit more possible. Also, given the fact that we on the RSI, for example, we're quite oversold here, but that doesn't mean, don't get me wrong, we are near that 30 zone, but nothing's stopping it from going all the way here towards, like, for example, here back in the end of July when it went to around 17-18 zone. So yeah, that's why I don't really focus much on the RSI here. If you're thinking that if the pair is already quite oversold, yes, it is, but it doesn't stop. It doesn't mean that it cannot go even lower. So that's why I don't really use these indicators. I keep them on the chart for positive and negative divergences, but like just to purely go from this idea, I would probably need to see this one dropping heavily to the downside, and then maybe popping back above the 30 zone right here, and then I could start maybe considering the upside. As you can see, by the time I'm talking here, while I'm talking here, the pair is already kind of trying to drift below this. So keep your eyes on this hurdle, guys. So let's see if we can actually go for a bit of a further move lower. GBP CHF, as you can talking about lower, yep, pushing nicely lower. It's dropping below this 1.18 territory. I spoke about this level yesterday and today, this morning, guys. So yep, wonderful, good news. Now the big question here is, can we keep this daily candle below it? If we can, then the next target is the low here, the low of the 20th of October near the 1.1723 territory. And by the way, that's the lowest point of October as well. So 1.1723, that's going to be my next target. Let me just probably shift this arrow here a little bit like this, draw it this way. And yeah, we'll take it from there. For now, all eyes are on this hurdle, this 1.18 zone. Let's see how this is going to play out today. But at the moment, guys, probably at this point in time, I would probably say wait to see what's going to happen, and then we can maybe squeeze something out of this pair tomorrow. EURUSD. EURUSD is flirting again with this 126.46 level. I keep talking about this one for the whole week already, and last week as well I spoke about this one. Yes, we keep getting these overshoots, but we don't get that daily candle staying above it. So yeah, we kept getting these false breakouts, but what we need here is that daily candle staying above this area, and then we could go for that 127.07 level marked by the highest point of September. At the moment, the only thing we can do is, yep, watch, because again, some of you, as I said, some of you maybe could think that this is part of the bullish flag here. Yes, I've mentioned that myself, but guys, cannot stress this enough. Wait for that confirmation break, and wait for that daily candle kind of to stay above either well, above this, in this particular scenario, above this 126.46 level. If we do see something like that, it increases the chances. I'm not saying that this is gonna go for sure up there, but it just increases its chances for moving further north, because we're all about here trying to increase our probability, guys. Not to probably always be right, but to increase our probability. So don't try to kind of be Nostradamuses, guys, and try to just improve your probability. And this is, like I said, one of these ideas here that I'm explaining here could be one of those that could help us aim for that highest point of September. And for that, I need to see that daily candle staying above this 126.46 level, which is the high of the 10th of September. Euro TRY, quick update here. I talked about a lot about this one. I need that, again, daily candle staying above this 9.55 level in order to aim for some higher levels. At the moment, I'm just observing this one. Yes, it's looking a little bit more positive than negative, but again, I don't want to get caught out here, like for example here on the 3rd of December, where we got a nice push higher, but it then still ended up drifting back down. So like I said, wait for that daily candle to remain above this hurdle. And finally, EURUSD. So the pair is drifting nicely to the upside. So it's, in a way, it's kind of following the scenario of Euro JPY here, but again, similar story. We need that pop above the 1.2155 territory in order to get a little bit more excited with the upside. At the moment, I'm just going to observe the price action, and I'm going to take it from there basically for now, and just keep an eye on it, because at the same time, if something happens drastic in the news, this could reverse sharply to the downside and could drop below this 1.2078 zone and aim for that, and then we could aim for that upside line taken from the low of the 4th of November. So keep your eyes on that one. So guys, I'll have to wrap it up here. Thank you very much for watching and listening. If you want to catch my video tomorrow morning, as always, my Trader's Espresso, 7 o'clock GMT time. For now, have a wonderful evening, and I'll see you tomorrow. Thank you very much, and bye-bye.